about buying your first home here in the Chicagoland suburbs? Whether it's a ranch-style house in Orland Park, luxury home in Burr Ridge, or maybe just an affordable gem here in Bridgeview, the question you might be asking is, how do I actually pay for it? Financing your first home might feel a bit overwhelming, but I'm here to break it all down for you step by step. By the end of the video, you're going to have a clear understanding of how to make your dream home a reality. What's going on, everyone? I'm Shehayber, your go-to realtor here in the Chicagoland area. I'm here to make buying or selling a home as simple as possible. Make sure to hit the subscribe button and tap the notification bell so you don't miss out on any of the insights I got for you. Now, let's dive right in. The first step is figuring out how much house you could realistically afford. This means taking a good look at your income, your expenses, and your savings. A good rule of thumb is to keep your total monthly housing costs, including your mortgage, your property taxes, and insurance, at around 30% of your gross income. This keeps your budget manageable and sets you up for long-term success as a homeowner. Now let's talk about property taxes. In the suburbs, taxes can vary quite a bit depending on where you're looking. Towns like Orland Park or Tinley Park tend to have slightly higher taxes compared to smaller communities, so it's important to factor that into your budget early on. The last thing you want is a surprise when those tax bills come due. If you're looking for a more detailed breakdown on how to calculate your budget and account for all the costs of buying a home, make sure to check out my first video on YouTube where I go step by step into everything you need to know. Remember, the goal isn't just to buy a home, it's to buy one that you can comfortably afford and enjoy. Once you know your budget, it's time to start looking at how to finance your home, and that means choosing the right loan. Different loans work for different situations, so let's go ahead and break it all down. Conventional loans are one of the most popular options, especially if you got a solid credit score and some savings for a good down payment. These loans usually require a minimum 20% down. The higher your down payment, the better terms you're likely to get. They're ideal for buyers with strong credit histories who want to avoid the extra costs like private mortgage insurance, which you can skip entirely if you put down 20% or more. If you're a first-time home buyer or don't have a lot saved up, an FHA loan might be the perfect fit for you. These loans, backed by the Federal Housing Administration, require as little as 3.5% down, and they're more forgiving when it comes to your credit score. They're especially great if your credit is in the 580 to 620 range, making home ownership a lot more accessible. But what's a trade-off? FHA loans come with mortgage insurance premiums, both upfront and annually, which can add to your monthly costs. For veterans, active duty service members, and eligible military spouses, VA loans are a solid option. They require no down payment, no private mortgage insurance, and they often come with lower closing costs. If you qualify, a VA loan can save you a lot of money both upfront and in time. If you're eyeing a home in a rural or suburban area, a USDA loan might be worth exploring. These loans are backed by the U.S. Department of Agriculture, and they offer no down payment options for eligible buyers. They're designed for lower to moderate income families, and they're a great way to buy in smaller communities. Just be sure to check if the property you're interested in falls within the USDA eligible area. And finally, don't forget about the local programs designed for first-time buyers. In Illinois, programs like IHDA's Access Mortgage can offer down payment assistance, and there's even tax credit programs to help reduce your overall costs. These can be especially helpful if you're trying to stretch your budget while still covering your upfront expenses like closing costs. Choosing the right loan depends on your financial situation and your future goals. A good lender or mortgage broker can walk you through your options and help you find the best fit. Remember to shop around for different lenders. Different ones can offer different rates and terms, and even a small difference can save you thousands of dollars in the long run. After deciding on a type of loan that works best for you, the next step is getting pre-approved for the mortgage. This is a key milestone in the home buying process because it shows the sellers that you're serious and you're ready to move forward. It's also going to give you a clear price range for your home search, so you're not wasting time looking at homes that are way outside your budget. To get pre-approved, you're going to need to provide your lender with some key documents. This includes your recent pay stubs to verify your income, tax returns for the past 2 years, bank statements to show that your savings and your spending habits, and proof of any additional income like freelance work or maybe rental property earnings. While it may feel like a lot of paperwork, it's definitely a crucial step that lays a foundation for a smooth and stress-free home buying journey. If you want a more in-depth look at how to prepare for pre-approval and exactly what to expect, make sure to check out the third video on my channel where I break it all down step by step. Buying a home comes with a few upfront costs, so it's important to start saving for them as early as possible. The biggest one is usually the down payment, which can range from 3% upwards of 20% of the home's price, depending on the type of loan that you're going to be choosing. For example, FHA loans require as little as 3.5% down, while conventional loans may require more if you want to avoid private mortgage insurance. Then there's closing costs, which typically run between 2% and 5% of the home's price. These cover things like lender fees, title insurance, and property taxes, and they can add up quickly. Be sure to take all this into consideration so they don't catch you off guard when it's time to seal a deal. And finally, do not forget about the home inspection. This usually costs a few $100s and it's essential for making sure there's no hidden issues within the property. It's a small price to pay, but it's for peace of mind, and it can sometimes help you negotiate repairs or price adjustments with the seller. Planning ahead for these costs are going to make the buying process a whole lot smoother and less stressful. But financing is just one part of the puzzle. To make your home buying process as easy as possible, you're going to want to know a realtor who knows the Chicagoland suburbs inside and out. A great realtor is going to help you find a home that fits your budget and your lifestyle while guiding you through step by step. From finding the right neighborhood and negotiating the best deal, having an experienced agent makes the process smooth and less stressful. With the right support, the process becomes much less overwhelming and more enjoyable. So there you have it, your guide to financing your home in the Chicagoland suburbs. It might seem a lot, but breaking it down step by step makes it more manageable. If you're ready to start your home buying journey or just have any questions, I'd love to help you out. You can find my contact info in the description below, as well as in the comments, so you can go ahead and book a call with me. Thank you for watching, and I'll see you guys in the next video.